Doc here from North America. Good morning, good afternoon, and good evening. I was looking for an article that I saw earlier. It was talking about the dollar, and then when I went to put up, here it is. This could take the dollar down. Supposedly, it says by trying to figure this guy's name, McLeod. Uh, but I just don't see it. I see these people write these stories, but it just doesn't make any sense sometimes. But anyway, I wanted to have that on hand. I was looking at, there's a big push in the metals market, but the thing is that you can see on our chart there, we're looking at the on Chicago Quant. You see right there, we've got the Swiss franc. It's running fine and steady. The dollar is very firm. That's what that represents there. And then when we go over to J4X on a week-to-week basis, same situation. It's making 7-8 week highs, something like that. I just don't see the dollar really collapsing on any real aspect out of this all. As I said to somebody just recently again, and it's the old classic that we've been saying now since 2008. The dollar is the cleanest of the dirtiest shirts in the laundry. So in other words, it's not that the U.S. is so successful per se. In other words, removing its debt problems and so forth. It's just that we're the least of the problems. That's the amazing part. We have a GDP in the 20s, and that's in trillions, and our debt is in the 20s in trillions. So it's almost like a 1-to-1 ratio. When you're looking at debt to GDP ratios, 250 times for Japan, and I don't know, was it 125 times to Greece? And it just goes on and on. The numbers are just horrendously bigger. If anything's to be learned out of this whole situation, and that is follow the countries and join the currency pairs that have growth. In other words, real growth. Unfortunately, look at Germany. It has all the makings of a very successful, state, country, that type of thing. But instead, it seems to be trapped with, with not technology, but with rules and regulations that hinder growth. Whereas, here in the States, we're constantly fighting that battle, and we have much more latitude to stop it. Whereas, even with a Mr. Trump gone and let's put it this way, a Mr. Trump gone for the time being, and a Mr. Biden in there, he doesn't have the latitude to do much more than a couple of executive orders here and there each day. And he's done more executive orders than the last 10 presidents put together. But again, they've already, like over the weekend, there was talk of a $600 billion stimulus package, not the $1.9 trillion that Mr. Biden wants. And so there's limits here that stop the socialism and the poor capitalism type concepts. And instead of letting real capitalism flourish, that's what made America great. That's what makes America great. And I notice some want to pretend that capitalism is evil, but I'll tell you, I would rather live in a capitalist America than a Joe Stalin, whatever country it is, or union. And it's the same thing with China. I'd rather live in an America than a socialist structure. And Europe is that issue, and that's where we get to. We get to that situation where when you're trying to figure out the right pairs trades, choose the countries that have the best opportunity for people to grow financially. In other words, create businesses, innovate, create patents, keep the money that they make. They're the reasons why those currencies are better. And it just is. It's just a fact of life. And it's nice that, everybody wants to live in unicorn world, but it doesn't work that way. So if it did, America wouldn't be here. Would have been gone a long time ago. So anyway, we wake up this morning, or actually it became very clear on Saturday that the squeeze was going to be in silver. And obviously it has. Silver's up about $3. And we'll put that up on the screen there. The stock market, which was down like 200 points, is now up like 250 points. I'm trying to think what else can we say about any of that stuff. It's just, there's Melvin Capital. has almost 15 billion. No, it has 14 billion dollars in of public, of private money, and they've lost 53, over half of their capital. We saw last week 31 billion calculated to be lost in the hedge fund industry, and hence the word hedge. You got to wonder what they're thinking when they say they're a hedge fund. What exactly are they hedging? I have no idea. How can you bet a $20 stock to oblivion? I have no idea either. We used to say in options, if you sell something for $1, how much can you make? $1. That's it. And instead, if you buy a put option for $1, how much can you make? Untold multitude of more. So, the whole world is wondering, who are these alleged hedge funds and where did they go? Because they're not here right now. We're seeing incredible carnage in the hedge fund industry, which just shows you why we know for the last couple of years here at Dukascopy and at Doc here on his webinar, what I've been saying over and over again is the hedge funds are so far behind the curve and not really very good at what they do. They just been happy in bull markets and pretend that they're actually hedging when in fact they're just taking great risk. And this, you can see it now. They've done some really foolish things, and the industry is losing a nice slice of the chunk from that alone. Anyway, that's where we are today. Let's, as you can see, as we put on here, let's move this up too. Where does that do it? Right there. As you can see right there. There we go. You have a better view. This way you can see this here with the Swiss on the weekly basis. And you can see ours at the same time. This is doing fine. Now you want to look at something that's jumbled. They've changed data in it. It's driving me totally bunkers. Let's take a look at the metals market. There's copper. Copper's moving down still. A little sloppy there. That's no problem. It's been acting well. Went into the weekly sell there last week. And sure enough, and a daily sell. And it's actually down. But you can see the weekly is trying to turn back up here. Now let's go to the meat of the sandwich. And that is basically silver. Let's put the silver up. And you're going to see on Chicago Quant, it's all over the place on our math. It's amazing. It always straightens itself out. We're a little disappointed. You can see it on our fact check spreadsheet. Where's that at? Right there. Yeah, it's been all over the place. We're 4 weeks in a sell, and we're 3 days in a buy. And when we put it up now, you're going to see a very sloppy situation where it's not reflecting our math very well. It keeps on doing stupid things. It's back over the buy side again, but it's doing some really weird stuff. They keep on changing prices overnight on us, and we have no control over that. We just let the math do its thing. There it is right there. So you can see here, silver is roaring along. We went into the buy here. It wasn't a buy here the last 2 days, because you can see it's on our fact check spreadsheet. And somehow or another, over the weekend, they did something, and all of a sudden our math is pressing down, and then here again we are back in the buy from this action today, and you can see we are flirting with the weekly buy number. So we're happy that it's doing that. We just don't understand how this, all of a sudden over the weekend, they put more data in there and knocked it down. I don't understand that. I mean, I just don't understand what's going on there with this, and we're using reputable, very reputable data. And that's what's really making it very disturbing, because I know the source, I know the person who owns the brokerage house. It's one of the major brokerage houses in the world, and it's derivative guys. I don't understand it, how this is getting so sloppy with their data, but it happens every so often now. It's been very odd in this era of since 2008. It's all since 2008, since everything fell apart. It's been very odd. Markets are thin. Data is allowed to be put in days later. We're not even sure if it's accurate data. Not in the same sequence. None of it makes any sense. They just pile it in. Black pools are not being enforced. In other words, they're allowed to happen. They're allowed to execute orders illegally, and then if they put the data in over a 2 or 3 day period, the Securities Exchange Commission and the Futures Trading Commission both just turn a blind eye to it and just go, okay, yeah. They put it into the system 3 days later or 4 days later. I don't think it even fits in right. I think the data goes in, it makes it all over the place. And so that's what we see. Our math is that sensitive. It picks up that distortion. But anyway, you can see here. This is the squeeze of the week already started. Now we're not seeing it too much in gold. I think it's up about 14 bucks, 15. Let's see what gold is at right now. There's gold. We're going to drift over to the metals just because of this excitement here. And there's gold. And let's do that. And then let's do this. And let's give it a refresh. And you can see here, it's in a weekly sell, a daily sell. It's the same thing on our spreadsheet. And we can get rid of December there. It's not December anymore. I think it's April. So we just back that out like that. There we go. And, we're 1 day in a sell. In this case here, it's telling us it's 2 days. So it should have been 2 there. And so you can see the pressure is on here. And you can see that it is up. It closed on Friday at, was that 1850 basically. And today it's trading at 1868. Now, Robin and I we wrote an article last week for platinum, saying platinum, we call it the Yellen Spread, the Janet Yellen Spread, because she's the Secretary of Treasury. And this thing has come in a weekly buy, doing fine, but it's in a daily sell now for a bunch of days since here. And now it's come all the way back to it. Let's give it a refresh. Whoa, what happened there? Where'd you go? There it is. And so let's give it a refresh again, as I say. And there it is. And you can see the strength there. Now this closed at 1,079. We're just going to round them off like that on Friday. And then you can see today we're trading at was it 1,131. So this is up $52. So we're seeing platinum up $52 versus $17 for gold. And that's why we call this the Janet Yellen spread. Platinum is being bought, silver not silver, gold is being sold against it again. And we're starting to see the tightening up of that spread. Now it's only what is that? Gold is trading at. Let me just go over and take a look at gold one more time, and we'll take a look at gold here on the J4X too. And this is on the weekly chart. Gold is trading in the 1865, and so 11. So that's $731 spread now. It keeps on shrinking down the gold to platinum, and so that's being more consistent. So we're seeing that weakness there. Now we saw the article earlier, and I wouldn't mind if anybody wants to see some of the currency pairs. Instantly, we'll throw them up. But I found that the article this could take the dollar down by a fellow named Alastair McLeod, okay? Maybe it's Alistair. I guess it's Alistair McLeod. He must be English. And what he's saying is that you can see how he's, I guess he threw a chart up there. And he says you can see how through interest rates, the future of the dollar is actually tied to the future of financial asset markets. Well, that's obvious. That's no doubt about that. It's a combination of the military and the strength of America, and what makes it militarily strong is obviously its finances. And if you get a pop in the bubble, there is no doubt equity prices are wildly overvalued compared to the economic outlook. Quite honestly, he's saying there is no alternative but for markets to correct very, very heavily. Now, I'm going to stop right there. This is what always floats through my mind, and that is that they're talking about a correction, but the question really is, where do you run to? Are you going to really take your money and put it into some of that $17 trillion that's in debit? In other words, you actually lose money when you buy it as a fund manager? Are you going to take your money and move it to the Brazilian market or the European Union market or the Nigerian market? I mean, where are you going to run to? That's what I want to know. The Dubai market? Where are you running to? You know what I mean? So when John Short, I love that. I know a John Short. That's his real name. Hey, how you doing? That's the reason why I wanted to ask you about the crypto and silver. Perfect. Exactly. Now, there's no doubt about it. That's why I've been a big fan, big supporter of the crypto, is that we're looking for where can you run to. And obviously, the cryptos are a place you can run to. There's no doubt about it. Now, can they handle, a $21 trillion economy? Nah, they don't have that. They don't have the capacity to do that. So it's going to be a nibbling type of an event. In other words, more, we talked about this, John. I guess it was at the beginning of December or middle of December, and they were looking at the those statistics that come out from the Commodities Futures Trading Commission about who is long and who's short. The reports, and they showed that Wall Street is telling everybody to buy cryptos, but in fact, most of the firms on Wall Street don't own cryptos. They don't own the futures contracts. So it's, they're saying one thing to get clients to come in, but they're not, what do we used to say is that all hat and no cattle. In other words, you look like a big, a farmer with tons of cattle, thousands and thousands of animals to sell. And in fact, all you have is the hat and the fancy car and nothing else. And so Wall Street is really not aiding the growth of the cryptos. They're just kind of smiling and telling you, yeah, it's going to go to 100 grand or it's going to go to 300,000. They're telling you that, but they're not putting their money where their mouth is. Now, do I think that that's an alternative? Of course it is. There's no doubt about it. But can it handle Citadel? If Citadel decided tomorrow to get rid of all its derivatives and move only into the crypto derivative universe, could it handle it? Nah. They would blow it up. And so that's what the problem is the liquidity. And Mrs. Yellen, when she was Fed chairwoman, she even did a lecture on that. When she was Fed chair a bunch of years back before this new Fed chair, she actually said that. She said, they can handle $500 million. That's about it. I mean, every day in the equity market, they move, I guess, I don't know, $2 or $3 trillion worth of equities overall, and maybe it's only 15, 20 billion, here and there. And she's saying they only could handle $500 million. And then the currency market handles, I don't know, it's like, maybe like $20 trillion a day of currencies, and the bond market is flipping back and forth, trillions of dollars a day. No, there's not much of an alternative to run to. That's the problem. Is the cryptos the possibility? Yes. Are they worth having a slice of your assets in? Most definitely. You know what I mean? But can they handle a massive rush towards them? No. It'll benefit the longs. There's no doubt about that. But at the same time, when the longs want to get out of there, it'll also hurt the longs because there's not enough liquidity. So there's not a lot of shorts going on in there. Matter of fact, it's the opposite. The crypto market is pretty much heavily leveraged. That's what that whole story was about the last couple of weeks we did about the cryptos. And that is that the leverage and the company that is converting currency to that is basically a little shady. They're allowing 100-to-1 ratio action there. So that's what the issue really is that the markets are not liquid enough to really deal with that. But that doesn't stop anybody from nibbling away. Don't be afraid to nibble on these cryptos. So Bitcoin. Okay, so John Short says Bitcoin can't. However, some alternates can. Yeah, and even them, they can't. They don't have much room either. But we saw in the beginning of December, was it, when Guggenheim, the fund to the trusts, bought what was it, a little under $600 million worth of Bitcoin, and they've done really well. They've doubled their money in it, but they were also not long the stock market, and so they missed from September on that. Matter of fact, they got out of it in March. And getting out of it in March really didn't help them any. So, let's see, John says, isn't there more proof that there is more opportunity for the price to go up when they are forced to get into crypto? Oh, most definitely. I agree with that. When the dollar goes down. Well, the bigger question is, what would it go down against? See, that's the thing. When you say the dollar is going to go down, what is going up? In other words, what are they selling the dollars and buying? And the thing is, I just don't see that. I don't see them I don't see them running from the dollar because the dollar is very liquid. And so we see strength. Matter of fact, where are we on the spreadsheet? On line 25, we're 4 weeks in a weekly buy right there. Now let's take a look at the dollar itself through the dollar index, the UUP. Let's take a look at that. Where is it at? Right. I know we have a mouse around here that'll do this. There we go. Right there, this mouse. So we go over to here to Dookie Day, and let's take a look at UUP. That's the ETF of the 5 currencies, or 6 currencies. And you can see here, it's been, we went into the buy here, and it's going sideways up. I mean, it's not exactly exploding. I mean, it's way down from this area here back in November. When we scrunch it up, you can see that we're way down from last year's action in June, when it was flying along at highs, all-time highs, and the spike there and so forth. And, this was the panic of the coronavirus, and they ran for dollars, and they sold everybody else's currency off. And so right now, the question is, what are they going to buy if they sell dollars? And I don't think they're going to be buying, euros too aggressively. And I don't think they're going to be buying British pounds too aggressively. Are they going to buy Brazilian real and sell dollars aggressively? I don't think so. Are they going to be buying, dollars? Selling dollars and buying cryptocurrencies? Wouldn't be able to handle it. And imagine if you're someone that has like 2 trillion, you're a fund or an institution, and you have overall like, $1 trillion in assets, and you're going to sell all your dollars and buy cryptos. That'll explode the cryptos. You won't be able to get out of it. No, you'll be the one that pushed it up, and you'll have to hold on to it every day. And when you try to liquidate and take some profits, it's going to be hard because the liquidity just isn't there yet. So does that make sense? I hope it does, John. Gagan says, "Hey Doc, since we are at crypto, what's your verdict on?" I don't follow the individuals. I talked to Wilco. Wilco is one of the old presenters here at Dukascopy years ago, and Wilco is very aggressive and very involved in the cryptos. But I don't think any of the cryptos really are. To me, I see all the cryptos as the same. They're all using blockchain and so forth. I'm sure that they're all, there's a good dozen of them out there that are probably good, and they're probably matching. Watch the performance between Bitcoin and each one of the ones you look at. See how they act. If they're marching along exactly with them, keeping a premium or a discount, that type of thing. But I'm just a general fan of the cryptos, not any specific crypto. And the only reason why we follow, here I'll show you, the only reason why we follow Bitcoin is because they have futures contracts. So it's pretty clear there that it's being, challenged on both sides of the market, and that's what the freak out is. So there's, you can see there was that was Friday. So let's put what do we need there? So let's do this. Let's go take a look at the next month now. I meant to fix that over the weekend, and there it is there. And so it's just a little firm today. Let's see, we usually make that black, so let's do that. We'll make that black background, and you can see the daily there, acting pretty well. Let's see what we can do here. Style, make the histogram white so we can see it. Change the color of the time manifold to gold, and you can see here I see it, and then make this green line. There we are. And you can see there's pressure on this. We went into a buy on the front month. Where's that at? Let's just go into that. There it is right there. We were in the buy for a couple of days, 2 days. And that was Friday's move. And now that contract has expired. And let's just copy this like that. And then paste it. And we can park it down at the bottom. Paste. All right, now... there it is right there. So now what we're going to do is we're going to take that one and activate it again and delete it. And then now we're looking at the February contract, and you can see it's just a little bit firmer than Friday's close. Let's just reload this. Let's see what's going on there. Make them gold. And let's make that white. And you can see they're putting pressure on the February contract already. You know, it's trying to go into the sell here. We're below the zero line in February. So, and you can see the last 2 days have been pressured. So Friday, it closes at 34,450, and today it has been as low as 32,500. It's a $2,000 range, and then right now it's just trading off about $400 or $500. So that's my answer to the whole thing, really, is that I follow this more than the others solely because I can see it the best. And that's really the answer to it all in the end. So this is Feb. Let's put that in there too. We'll try to get this thing more updated. Feb bit C. There we are. And so that's the action that we're seeing at the moment there. Let's see. Was it Daraz? Hey Daraz, how you doing? Let's see. Oh, what was it? The cryptos. Urethra. John Short says, as much as I hate to say it, but you're probably better off holding the yuan, the Chinese yuan. That's not very liquid. You know, you can't. It's kind of like the cockroach hotel. You can get in, but you can't get out. That's what the problem with that is. So I wouldn't. That's one of the last places I would think to go in. Matter of fact, they only trade 2% in the world markets of currencies, so it's very illiquid. So I mean, you can buy the yuan, but you may not be able to get out of the yuan. That's the problem. And then DeRose says, let's not forget that Bitcoin is a big Ponzi. Yeah, you know, there's no doubt that you can use the concept to describe a lot of these things. I mean, stock markets are a big Ponzi. You know, in other words, they're convincing people that this asset's going to be better tomorrow than it is today or in the future. And so people come into it and like look at GameStop. GameStop doesn't have the earnings to even represent $15 a share in its PE ratio of normality. It's trading at what, $400 a share right now. So I mean, you know, that's you know, measuring price, looking at price discovery is a real challenge in this era because there's a lot of strange things going on. There's no doubt about it. So I hear you, DeRose. They do have that Ponzi nature to them, but the thing is that if enough people want to be long it, it's relatively safe. John Short says, DeRose, well, as much as you may think crypto is actually the future, it always happens when people doubt it until they miss the boat and start asking, I wish I was in sooner. Right, exactly. And so that is really the name of the game. You know, that really is. And Gagan, I'm glad we answered your individual question there of which crypto to go with. As far as I'm concerned, they're all probably about the same. You know, and the only difference is that if you can give me a call and a put, that's where I'm gonna. You know, I'm always gonna lean into. If you have binaries or calls and puts, I'm gonna be there first before I go anywhere else. And so, you know, we know Bitcoin has options, and so that automatically makes it a much easier place to trade. Okay, cool. Thank you for the compliment. So, the bigger question of all is that, where can you go? You know, I mean, we can fall back to that conversation. That is, where can you go when you try to sell the dollar? I mean, let's look at the cable. And we'll look at the euro. We look at some of the other pairs. But just looking at the Swiss today, you know, obviously they're buying dollars. Now, why would they be buying dollars if they think that it's a place to run away from? It's because there's not enough liquidity in any of the other areas or pairs trades to be able to do anything more than just nibble at it. You can see that action there, and you can see our math has been on the fact check spreadsheet. Where's it at? Right there. 3 weeks in a buy and 1 day in a buy. Let's just take a look at it through Chicago Quant. If I can find the right mouse. How about the right page? And there it is right there. You can see it's been in a... Now that's interesting. What do we have there? Now why is that? Let's just double check I have the right product up. I do. And so what's that? 20... How is it just 1? This is saying that, you know, I've had it in a buy since here. So this is 2, 3, 4, 5. 5 days. And I have... Oh, did I mix up Canadian with it maybe? So that's a 5. And then I know it hasn't been changing. Let me go over to take a look at Canadian real quick. And Canadian's been roaring along, and look at it. It's trying to lift up here. Now, it tried to get into the sell on Friday, but it couldn't get there. It's been in a buy for a bunch of 5 days also. And then you can see, even now, let's give it a refresh. Even now, the Canadian is doing its best to go up again in value, even with the red dots. And it is playing with the time manifold. That could possibly start to slide into a sell on a daily basis, but then look at the weekly. It's starting to lift its head up again compared to this is where it went into the short side on the long weekly trend there. Let's see, Caracas stock market. Yeah, exactly. You know, I mean, the bigger question is, it's not as much as getting out of something. The bigger question is, where are you going to go with it? You know, where are you going to take those assets, park them, and hope that you're going to get them back? I mean, that's why there's 17 trillion. Daraz is right. You know, there's 17 trillion in assets on the planet right now that yield 0 to minus. As I take a sip of water here. Yeah, so 17 trillion plus. Last I heard it was 17 and a half, but I'm not going to get too antsy with that. But, you know, the bigger question is, where do you go? Obviously, they're going there. They want to know if they put $1 billion in, if they get close to $1 billion back, they're happy. I mean, think about it. Some of these hedge funds have lost 50% of their assets. Some of them have lost over $31 billion over total last week alone. Who knows what this week will bring? And that is that. Anybody care to see anything particular? If not, we're going to take a look now at the euro. We'll take a look at the dollar, the cable. We'll take a look at those two and see if that is a place to run to. Well, here's the cable. There's cable. Let's do that first because it did go in that daily sell on Friday. I did remember that. See it right there? Line 16. No, I'm sorry, 13. It's 16 weeks in a weekly buy and 1 day in a daily sell. And you can see here there's still some pressure on it this morning. That's a weekly chart. So it's showing you, you know, it's been in a weekly trend for a while. Now, let's take a look at it through Chicago Quant. And you can see it went into the sell on Friday, and now it's trying to get back into a buy on today. And the weekly's been in that long trend since the high 20s, like 29 or 28 or something like that. What was that? 28 and change, 29. And now it's trading at a high today of 137.57. So there's some life in that. There's no doubt that that's a place to run to on some scale. But can you move 2 or 3 trillion into it, or can you only move, say, you know, 100 million into it? It's more likely 100 million, and that's what the problem is. Is that it's like the cockroach hotel. You can get in, but you can't get out. And then what happens is that it's the same thing here. That's why they put 17 trillion into assets they know they can get their money back on. Now here's the euro. The euro's been in a weekly sell since here, and it's really not gone down too much since this week when it went into that, you know, from here to there. Went into the weekly sell confirmed on Friday of that week, and you can see it's not going anywhere since. And you can see we were in a daily sell for like 4 or 5 days. Again, can you put money into the Frankfurt market and the Swiss market and you know, the London market and, you know, half a dozen of the other markets, the Milan market and so forth? I kind of doubt you can rush in there and throw you know, $3 or $4 trillion worth of assets and buy them and expect to get out of them in the next 2 days or 3 weeks. You know, and when you're an insurance company and you're trying to park assets, you need to put them where it's the most liquid. Yeah, let's take a look at the Turkish lira. Where are we on that? That's line 17. That's our dessert when it comes to looking at pairs trades. 7 weeks now in a weekly sell, right there. That's line 17. 8 days in a daily sell. Let's take a look at it on J4X on the week-to-week basis. right there. You can see the thing's been in a downtrend for a while, just like our math is saying. 7 weeks, just that alone, from this top right here, we've been in a sell. And you can see here it on the J4X, it broke down even earlier on this big slide of the change of politics there. Some ministers were changed and so forth, and some policies were shifted, and it's definitely made it happier, that's for sure. And then let's take a look at it here at the same time, and there it is there. You can see we've been in a daily sell since here, and in a weekly sell since this week here, and was that the 790s area, 780s area, and now we're trading at the 730s area. So it's been interesting. Things are looking a little bit better there. Obviously, there's a lot of profit taking going on in that Turkish lira. I would call it more than anything else is I want to call it the dead cat bounce. I really do. I think of it's more of just profit taking. When something had runs from 5.5 to 8.5, and you're trading at 7.5, or in this case here 7.3, you got to assume that's more profit taking, and I hope that the new policies that were enacted about 14 weeks ago are going to follow through. So that would make some sense to me. So that's the Turkish lira at the moment. Now let's drift over to let's see, where do we go to? What was it? I guess take a look at the Canadian. See what the Canadian looks like. Right there. You can see it's, like I said, it's trying to turn up. The daily is turning down, and the weekly is turning up. So it's going to be trapped in some type of, no direction. And we usually base this as we watch this and the NASCAD to understand the oil market. Right there. And the NASCAD's been in a weekly buy for a long while now. That's line 20. What is that? Line 23. 13 weeks in a buy, and it did slide into the sell on. No, it didn't slide in the sell on Friday, did it? No, it did not. So that doesn't belong there. So it's still here. 1, 2, 3, 4, 5, 6, 7 days in a buy. So let's fix that. 7. And so it looks like it's just holding up. With this action, you would think oil would be sideways to up a little bit. That's what I'm thinking. Let's take a look at it here on J4X. Light, sweet crude right there on Dukascopy. There is talk this morning of a couple of oil companies merging together. Was it Exxon Mobil and Chevron? So the consolidation is going on. You can see that upwardly trend that we've been in for a while. Where's that? That's line 10 weeks now in line 5 there. So let's do this. Let's take a look at it here. We'll save that data too at the same time. Where's Mr. Mouse? Right there. There's the action. Let's just give it a refresh, and we're going to save that data. So this thing is trying to be in a sell still for the last couple of days, but it's already climbed back to where it went into the daily sell, which you couldn't take to begin with because why, traders? We're in a weekly buy. So we just knew that there was going to be some weakness, but it wasn't something that you would try to sell into. You were just waiting for the next daily buy number to come out. And that's where we are there in the March oil. Then we take a look at natural gas right there. Natural gas is doing that thing also. Been trying to act very well in here. We're in a weekly buy for 4 full weeks, 4 full weeks, going on a 5th now. Been a daily sell since Friday, but you can't take that again and again. Why, traders? Because we're in a weekly buy. So it's made a nice bounce. I guess it's from the snowstorm we've had here on the, half the United States is under snow now or something like that, and so that is putting pressure into the gas market on some level or another. And then we take a look at, let's do this. We always go over and look at bean oil to see what's going on with bean oil. Because you can burn it, put it in tractors and so forth to run things when commingled with other stuff. Let's see. Let's take a look at bean oil right there. You can see bean oil sideways for the last 4 days. You can see we've been in a long, long trend in bean oil too from the what is that, the 33, 34ish area, and it's traded all the way up to the 45 area. So it's been a wonderful move. In the last 4 days, it's been in a daily sell, but still holding on to that weekly buy there. And so that's the third of the sectors there of oil itself, or the energies that we like to look at. And then what we do now is we'll take a look at the metals, and we looked at silver there, which is obviously kind of crazy. And we're just marching along, watching it do its thing. Let's give it a refresh again. Oop. And there it is right there. Just marching along on its fourth day of buy, because we don't trust those data that was put in over the weekend. Would rather see it done live, the same day. That's what we're trusting. We trust the same day stuff on some of these products. And then looking at gold, you can see gold is trying to lift. It's trying to get up. And again, cryptos seem to be taking that, or as we used to say, cryptos are eating their lunch. There's no doubt about it. The cryptos are definitely a more popular product at the moment. You can take delivery of them, which is something that's really hard to do with the metals market. And then you can see copper, which again, feeling the pressure, which is a real surprise there. You would think that they start to get some life, and we can see we went into the weekly sell last week. We're in a short here. It's like, okay, you can be short, and it's obviously making some money, but we're already flirting with a weekly buy. So it's like, take the profit, wait till they figure out what they want to do with the metals complex there. So copper is trying to show life into it again. And then last of them all is what I talked about very earlier in this webinar, and that is the Yellen Spread. Right there. Platinum is 50 some odd dollars up compared to 14 when it comes to gold. And it just keeps on finding a way to go. It's been in a weekly buy a much longer period and refuses to let go, whereas gold is in a weekly sell. And you can see the daily, it felt the pressure, but wasn't allowing you to get short because we were concerned that it's going to find a way to get up again. And sure enough, here it is. And it's playing with, what's that, probably like 4-year highs or something like that at the moment. It's probably running, it's doing very well. It's been years now since it's seen these numbers. And so there is the platinum market. So let's see, what's next? We go from the metals, we take a look at the stock indices, just as, what was it, Daraz was saying, sell your stocks everywhere else and run to the Caracas market, I wonder where those new crypto and Reddit millionaires will invest their money. As far as I can tell, John, it sounds like they stay in the position. That's what's a good thing, really. In other words, they're not short-term overnight buys. They're holding on to those positions and carrying them for months and years. They have a lot of confidence that it's the new place to be. And I don't blame them. When you see something, what happens to a GameStop, you got to wonder, the competency of some of the, it's that pyramid thing that, was it Daraz was saying, It's like, a Ponzi scheme. In the end result, you start to wonder when you see some of the craziest things going on in some of these stocks that have no return and they're not making any money. So all it is a mechanical trap. In other words, there's too many shorts. The shorts have to deliver when it goes to a certain price, and that's it. They're just stopping them out. Now we'll take a look at the stock indices, because here we go. We're talking about that. Is that these are they really, are they really the place to be? You can see here, it's trying to lift up in here. It went into the weekly sell last week. Did it do it there? Yeah, it did. It went into the weekly sell last week. And it's trying to get right back into the buy here. You can see that this week. Matter of fact, we can move that little circle thing over like that and shrink it down a little bit, like so. Grab a hold of it, just grab a hold of it there and move it over one like that. And you can see it's trying to get back into the plus side. There we are. And so that action's going on there in the NASDAQ 100, which is what's happening is funds, since they're getting beat up with the bad trades, they have to sell products, stocks. Doc likes to call them products, but they have to sell the stocks to compensate for the loss. They have to take profits in things they didn't want to take profits in. So they're being forced to liquidate the broader market, and that's what's going on there. So that's why we see the weakness. And when we look at the S&P 500, we're seeing the same exact thing. It went into the weekly sell there, and here we are. Whoop, right there. Right here, we're starting to play the buy side of it again. Just 1 week. We went into the sell last week, and it's already trying to get back into the buy side on a week-to-week basis. And they don't have much of a choice, because what we saw last week was the selling was mainly because of the losses they took. They have to offset them. They have a whole year to do it, but they're doing it fast, taking some money and running. John Short says, I just assume some will replace those hedge funds and be the same thing that they swore to destroy, as the same memes goes. Yeah, I agree with you. I don't. The whole public or managing private money has been not the best of things for a lot of these funds. Hedge funds have not made money in a while. They don't deserve the 2 and 20, and they're not getting the 2 and 20 as they used to. And obviously, they're really reflecting how bad they are about hedging. You can see here in the March Russell here. Now this index here is a representation of the shorts, really, and that's why it was running like a mad animal compared to all the other stock indices. And now they're not reaching for it as a hedge anymore, solely because they realize it was a bad hedge. Buying this indice did not save them. They got crushed. So in other words, a lot of these companies, these hedge funds, were selling, Nokia and GameStop. They were shorting all of them, and they were buying this as a hedge. They were buying the Russell 2000. And obviously it made some money, but it didn't triple in price. It only went up maybe 20%, which is nice. But when you have something that goes from $20 to $400, you need a hell of a lot more juice on the hedge side. And it's obvious that they had no idea what they're doing when it comes to hedging. That's why we're big binary and option people here. We want, when it goes up, we want the hedge to go up. When it goes down, we want the hedge to go. I guess it's like the opposite. Okay, so when a particular strategy goes down in value and loses money, we want the hedge to make money, and we want it to make the same amount of money that the sell side, the opposite side is taking, and vice versa. When we're long something and it goes down, we want our hedge to go up in value. That's what the problem is. A lot of these hedge funds were doing things like buying Russell 2000 indices, and you can see it went from 1800 to 2000, or was it 2100? Matter of fact, it got up to 2200. So it picked up a good, was that 15%, 20%? But how do you ride something short from $20 to $400? That is not going to make your P&L look very good whatsoever. And that's where the issue is, and that's why this was so strong here. So, all right. And then we take a look at the Dow Jones Industrial Average. Same situation. It's been gliding down because they need to take profits because they've taken such a painful hit in their shorts. So they're being forced to liquidate good assets, or assets that have been making lots of money, solely just to compensate for the disaster. Now you can see here the Dow is not flirting with its weekly buy this morning, whereas the others are. This one is not. This is holding down. So we'll save that. And so that's really what it comes down to. And then, basically, as some have said here, where do you run to? Well, you run to the cryptos. You run to the bonds. That's what goes on here. There's the 10-year bond right there. So the 10-year bond is in a weekly buy since last week. It's been in a weekly sell throughout this little slide here. And it's been trying to go up more, and it goes down since it slid. And you can see we're in a daily buy for weeks. And we went into the weekly daily sell here on Thursday, and then Friday it was down, and now it's trying. Let's refresh that. It's trying to perk up because it's a flight to safety, trying to find a place to go hide. That's what that really is. But it's not doing it at the moment. It's not getting there. Just they're probably going in by the end of the day. It'll be, might be down again, because it's not the best of places to go hide in. But it's guaranteed that if you put $1 billion or $10 billion into it, chances are you'll get your $1 billion or $10 billion back. It's liquid enough that you will not distort the marketplace. And then the 30-year right there. You see the 30-year is going through the same capitulations. And it did get into the buy here, and then it went back into the sell on Friday. No, it didn't go into, it's still in the buy. And so, because it was a green dot. Now let's do a refresh on this and see if that's right. No. Okay, so it's still in the sell. There we are. So it's been in the sell since the 28th, and it's still being sloppy and trying to stay that way right now. And you can see right here, it's trying to get into the buy from last week. It's a, let's see if we can move this. It did. It went into the buy. So we can get rid of that altogether. Where's that? Remove. So how do we remove that? Remove. So it did. It went into the buy last week. It's plus by the hair of its chinny chin chin. But it's in its daily sell, so we got to wait the 30-year. Now this is the 30-year we're talking about. So a lot of the world is leaning on the 10 years and the 7 years and the shorter term, And let's just do that again. We'll save it. And that's where we are. That's the alternatives. And they're not pretty. The alternatives are more because they're liquid more than they are that you would say like, oh, geez, I want to own that. I think, it's a place for me to be invested, It is definitely not the place to be. So, let me see. What else we got going on here? Let's see. I guess we can go over and look at the commodities. It's been very interesting to see, a world that seems to be reaching for, we've seen there's soybeans. Soybeans have in a weekly buy for 22 weeks, is it? What's that? Line 3. 23 weeks in a weekly buy on our fact check spreadsheet. Daily wise, it's been in a sell since, let's see, it flirted with the buy on Friday, but obviously it's not there now. So we can remove that. Let's refresh it. And it's still feeling this sell here. And it's a bit higher. It's in the wrong area, But again, why are we not short this thing? Because we're in a weekly buy. So it's a neutral now. Remember, 3 positions, traders. Long, short, neutral. There's times where you do nothing. And let's save that. And that's, we're seeing some nice high prices here, and they don't seem to want to back off. Robin and I wrote something about that last week or the week before that. And we were saying, will we see $3 corn again? It has that look like it doesn't want to do it. Now you can see here the meats have been in the sell for 2 days, but we're in the weekly buy for a bunch of weeks here. Was that 3, 4, 5, 6? 6 full weeks going on a 7th now. And, it's a 7th week going on an 8th. So, hogs are holding their prices. No one seems to be really pushing this stuff out the door. They are, obviously the world is in need of food. Not in the United States here. We got it all over the place. But other places where they like to control, the politicians think they're smarter than the marketplace itself. They're the ones that are starving. And you can see here it closed in a daily sell cattle on Friday. But again, we're in a weekly buy for 3, 4, 5, 6, 7, 8. Starting off a 9th week in a buy. And so that's the Feb. And then, let's see, we take a look at the April too, which is basically becoming really the front month of it all now. There's April. And it's much smoother and not challenging, and it's not even in a daily sell. It's been in a daily buy now since the 19th. So it's been catching all this action. And Friday they tried to knock it down, but they didn't get it into the sell. Let's just give it a reload too. So the back month is doing, well, I think they're really making this the front month now. We're probably going to be getting rid of the February. That's delivery. But we'll leave it on there for the farmers that are, trying to market their product, making sure that they have some insight to the pressures of the front month versus back month. And then here's corn. You know, weekly buy for 24 weeks. Went into a sell here, but it's not really doing anything but finding ways to go up in value again as usual. And that's that weekly putting the pressure on. And you can see here, they don't seem to want to let go of it. And it's really hard to believe that we're going to see the low threes again for a long time. Because there just seems to be some enormous pressure to be owning the crops. Now, wheat is curious. I guess wheat is much easier in many ways. You know, we do get a couple of crops out of wheat with no problem. And you can see here, this week it is flirting with the weekly sell, but it's been in the buy just only 2, 3, 4, 5, 6, 7 weeks. And, 8 weeks. And then now it's trying to push into a sell compared to the 23 and 24 weeks we've seen in soybeans and corn. And we've been in a daily sell for a few days there. So, obviously the world is hungry and needs food. Let's see, is there anything else? John Short says, I assume we'll replace those. Yeah, okay, so nothing more there. We're kind of down to the end of the road here, traders. And so what we'll do is, tune in again next day, tomorrow. This is, what is this? This is the feeders, the young cattle. And that closed in the weekly sell last week. And we'll see how that goes. It's in a daily sell and a weekly sell, so there's some pressure on the young ones. All right, traders, happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. And it will be interesting to see how the metals play it out the rest of the day. I'm looking forward to that.